What if I told you billionaires have a secret 7-ratio formula that can predict which companies will die within 5 years, and they're using it to legally steal billions? In the next 10 minutes, you'll see how corporate predators like Carl Icahn executed this plan to perfection. And I'll give you the 7 ratios you can check today to make sure you're not their next victim. By the end, you'll have the exact checklist that billionaires don't want you to see. Welcome to the Wealth Project, where ambition meets opportunity and your journey to wealth and luxury living truly begins. Here, we deconstruct the playbooks of the world's most successful so you can transform your future. If you're ready to elevate your life, subscribe, follow, and ring the bell so you never miss a masterclass. Welcome to the exclusive club, where you don't just watch, you learn to win. Your next lesson starts now. This isn't theory. It's a pattern. You're about to learn the warning signs that make a company irresistible to corporate raiders, the psychological tricks that they use to take control, and the financial engineering moves that bleed companies dry. The perfect victim. Why this matters to you. Because before you invest a single dollar, you need to understand what makes a business vulnerable to corporate raiders. The warning signs that doomed TWA are the same red flags you should watch for. In 1985, Trans World Airlines was an American icon. Founded by Howard Hughes, TWA had carried Hollywood stars like Elizabeth Taylor across the Atlantic in luxury. But beneath the prestigious brand was a company bleeding money. The 1978 Airline Deregulation Act unleashed brutal competition. TWA was stuck with aging planes, expensive union contracts, and changing management. They were profitable, but barely. This made TWA the perfect target for Carl Icahn, corporate raiding. Icahn wasn't interested in running airlines. He was a financial predator who saw companies as collections of assets to be liquidated for maximum profit. His philosophy was simple. Most corporations were run by lazy executives who didn't maximize shareholder value. Now you understand how predators choose their prey, but what happened next reveals the psychological warfare that Icahn used to seize control, and its strategy so brilliant and ruthless that it changed corporate America forever. The psychological warfare. Why this matters to you. Because understanding how corporate raiders gain control teaches you to recognize when your investments are under attack. It shows you the power of strategic positioning in any negotiation. In early 1985, Carl Icahn began quietly buying TWA stock at $18 per share. When management realized what was happening, they panicked. They knew Icahn's reputation as Wall Street's most feared corporate raider, famous for hostile takeovers and green mail. Desperate to stop him, TWA's board found Frank Lorenzo, head of Texas Air Corporation. But Lorenzo had a terrifying reputation as a union buster who destroyed worker contracts. At Continental Airlines, he had fired 12,000 employees and slashed wages by 50%. This created an impossible choice for TWA's unions: face the corporate raider or the union buster. Here's where Icahn showed his genius. He met directly with union leaders, promising to preserve their jobs and invest in new planes, but only if they accepted wage cuts and supported his takeover. He positioned himself as the lesser of two evils. The unions, terrified of Lorenzo, agreed to back Icahn. With union support, Icahn defeated Lorenzo and gained control of TWA's board in late 1985. He had used fear and strategic positioning to turn the company's own workforce against management. So now Icahn controlled TWA. The unions thought they had saved their jobs. But what nobody realized was that the real plan hadn't even started yet. What Icahn did next would make his takeover look like child's play. The strip mine. Why this matters to you. Because this is the core of the Vulture playbook. Understanding this strategy will change how you evaluate any investment or corporate restructuring announcement. For 3 years, Icahn ran TWA like a normal CEO. He negotiated contracts, ordered planes, and maintained the facade of building a business. TWA stock rose from $18 to over $30. But this was preparation for his masterpiece. In 1988, Icahn executed a leveraged buyout, taking TWA private for $1.2 billion. This gave him total control. Then came the Icahn strip. Icahn had TWA's board approve a massive special dividend of $469 million. Here's the brutal genius. TWA didn't have this cash. To pay the dividend, Icahn forced the company to issue $400 million in junk bonds at 16.5% interest. The company went deep into debt to pay him personally. Icahn had forced TWA to take out a massive loan to pay him, while the crushing debt remained on TWA's books. It was like forcing someone to mortgage their house to give you cash, then walking away while they struggled with payments. Icahn received $396 million while saddling TWA with unpayable debt. The dividend was devastating, but Icahn wasn't finished. What he did next would strip away TWA's most valuable assets and guarantee the company could never recover. Selling the crown jewels. Why this matters to you? Because when you see companies selling their most profitable divisions, you need to understand whether it's strategic repositioning or corporate cannibalism. By 1991, TWA was drowning in debt from Icahn's dividend. The company was paying $66 million per year just in interest. They needed cash desperately. The crown jewel was TWA's routes to London's Heathrow Airport. Heathrow slots were the most valuable real estate in aviation. Only limited airlines could land there daily, making these routes incredibly profitable. Business travelers paid $3,000 for first-class tickets to London. Icahn sold these routes to American Airlines for $445 million. He sold TWA's most valuable asset to its biggest competitor. It was like selling the engine of a race car to your rival. American Airlines immediately used these routes to dominate the transatlantic market. Without the London routes, TWA lost its ability to compete in the lucrative transatlantic market. With its most valuable assets sold and crushing debt, TWA was now in a death spiral. But the final chapter reveals something even more shocking about how the vulture playbook really works. Death by design. Why this matters to you? Because understanding how financial engineering can doom a company helps you spot warning signs in your investments. The numbers tell the story. Before Icahn's takeover in 1985, TWA had manageable debt of $1.8 billion. After his dividend in 1988, debt exploded to $3.2 billion. The company was paying $200 million yearly in interest on money extracted by its own owner. TWA couldn't afford to modernize its aging fleet. While competitors brought fuel-efficient planes, TWA flew gas-guzzling aircraft from the 1960s. Higher costs and lost routes created a perfect storm. The company filed for bankruptcy in January 1992, just 4 years after Icahn's dividend. It filed again in 1995 and finally in 2001. American Airlines acquired the remains. The iconic TWA brand disappeared forever. This timeline proves everything. 1985 takeover, 1988 dividend, 1992 bankruptcy, 2001 liquidation. The vulture soars higher. Here's the shocking truth. While TWA was destroyed, Carl Icahn's wealth only grew. He used the capital from TWA to build his empire, repeating the same playbook on company after company. Today, Icahn is worth over $15 billion. After TWA, he targeted Texaco, extracting $2 billion, then RJR Nabisco, Motorola, Time Warner. Each time, the same pattern. Identify weakness, gain control, extract value, abandon the remains. This is the vulture's playbook. Identify vulnerable companies, gain control through psychological warfare, extract maximum value through financial engineering, strip valuable assets, and abandon the debt-ridden carcass. The most disturbing part? This strategy is perfectly legal. Icahn understood that in corporate America, there's no rule against bleeding a company dry as long as you follow proper procedures. You now understand the 3-step vulture playbook. Identify vulnerable companies, gain control through psychological pressure, extract maximum value regardless of consequences. This knowledge makes you a more sophisticated investor. When you see heavy debt loads, activist investors circling, or desperate management moves, you're watching the vulture playbook in action. You can protect your portfolio by recognizing these patterns. There's a deeper lesson about wealth creation versus wealth extraction. True builders like Warren Buffett buy companies to improve them over decades. Financial predators like Icahn buy companies to strip them for parts. As an investor, you have a choice. You can be the vulture or you can be the builder, but you can't be the victim. Here's the part I didn't tell you. This formula isn't just history. Right now, 23 S&P 500 companies are showing these exact same warning signs. Luxury, freedom, and success are closer than you think. Don't just watch, take your next step. Choose our latest insights or a curated favorite, both waiting for you on your screen. This is The Wealth Project, deconstructing wealth, transforming your future. Subscribe, get the rulebook, and remember, you're now part of the exclusive club, Playing to Win.